Welcome back to F.A.C.E, Katie. Before we get going, Katie, I'd like to congratulate you on that call you made in August. I saw it on CNBC. You turned bearish up there when we were up against that 200-day, looking for a retest of the lows. Very nice work.
Thanks so much, Dale. Yeah, that was a tough call to make, to be honest, but it kind of feels like we're probably going to be in store for something similar here pretty soon. So we're watching it closely.
Okay, so if you want to share your screen, a couple of markets I'd like to go over with you and get your impressions wherever you want to start. If you want to start with S&Ps, that's fine.
Of course, yeah. So, I mean, this is the S&P futures. Let me make it bigger for you all. We've been really honed in on short-term momentum. There are a lot of similarities between this relief rally that we've seen and the summertime relief rally. And so we've been trying to respect the short-term momentum behind it and also really tuned into the daily indicators because we feel we have to be. We'd love to normally eliminate some of the noise that we're getting a little caught up in, but this is what the market's lending itself to. And we do have a lot of clients who are trying to take advantage of the counter trend move. So therein, we feel like we have to kind of help them navigate it, even though we don't really advocate counter trend positioning. So just as of today, we have a couple interesting things going on very short term. The consolidation phase, which is not unexpected after the previous week's very strong rally.
Yeah, can you define a Sigma 7 event to our community?
I don't know. That's all you tell. So this is the daily stochastic oscillator on a 12 period. I know we have some technicians in the room. When it turns up like it is doing here, we call that a bullish pop. And the bullish pops do tend to see minor upside follow through. And so we are looking for this consolidation here to resolve to the upside for one last push higher before this relief rally fails. Now, if you look at the proximity of the 200-day moving average in purple here, this is the S&P future, so it's around 40.73. It does look surmountable to us this time around. So we don't expect an exact pivot like we had at that August high, which was really pretty remarkable.
Could we get back there, Katie? Could we get back to the August highs?
Yeah, I think that's a bit of a stretch based on what I'm seeing. I'm looking more for the same level that I feel like everyone's looking for, which is kind of in that 4,100 to 4,200 zone. And that's just simply based on the posture of the indicator. So we're looking for a little upside follow through. Could
I ask you a question though? I really like your work, but I also like to think about what everyone else is looking at. And, you know, if you take a trend line from the all-time high and then the highs we had in August, that's going to break out over 4,100. I know a lot of people are looking at that line because it's so obvious.
Yeah, it's funny. I totally respect that because, you know, this is a downtrend, right? So that I could naturally see that people would be encouraged by a breakout above it.
Right.
You know, we use something a little bit different for our intermediate to long-term trend following node, and it's called the cloud model or Ichimoku, and you can see it here. So this is a weekly bar chart of the S&P 500. Weekly stochastics have room to overbought, so that could foster a little upside follow through. But you can see that the cloud is really looming overhead, and it's sort of a wider band and a little bit more stringent in terms of what would be required to reverse this downtrend. The upper boundary starting in December around 42.27. So we think that you know, more work would be needed to actually reverse this downtrend based on that metric. And we think it's unlikely based primarily on what we're seeing on the monthly charts. So the monthly bar charts have some indications that long-term downside momentum will continue to characterize the market here. So that's why we're really being adherent to the shorter term gauges. And as soon as we see things like this roll over, so the weekly would roll over, and or the daily MACD would roll over, that would be something that we would see as a risk metric. If you look back here after the summer relief rally, it was August 18th that we saw a sell signal registered by the daily MACD on this chart. And so if we see something similar, we're going to certainly recommend hedging strategies and what have you.
Okay, Katie. So the big question is, I'd like your view on the dollar, because we peaked confirming a lot of momentum indicators, and it was such a strong trend that, don't you think for a top to begin, we'd get some type of topping formation and an echo rally, a failing rally, something like that? What's your view on the dollar after that, the recent break here?
Well, it's not convincingly a long-term peak for the dollar index, at least. Certainly a corrective phase that's the most significant that we've seen in more than a year. But the impact on the longer-term gauges, this is the monthly chart. Here's a monthly stochastic. Here's a monthly MACD. Things that we focus on for trend following purposes. They're not flashing some big sell signal, and not yet, at least. So we're just respecting the uptrend. It's usually the right thing to do, is to assume that an existing trend will remain in force, barring what you're sort of citing, which would be more sort of a toppiness to it, as opposed to sort of a V reversal or inverted V reversal. So we've made the call for this pullback to potentially even deepen. So here was, this is the daily dollar index chart. You see this cloud here, the shaded area, also called Ichimoku, has really captured all these pullbacks. And all of a sudden we started to see this deterioration in intermediate term momentum following a DeMark sell signal, for those that know it. And this breakdown, it's something that is short-term in nature, but it does suggest that we'll see probably more downside, which would mean that the dollar index should take out this sort of 105 area. You can see it's a pretty important level for it.
Real important. I think people are going to, that's like a bull bear demarcation line, that if we take out that level, people are going to declare the bull market and the dollar dead.
Yeah, I would think so. It definitely has some psychological significance, right? It's such a round number. It's the 200-day moving average. It's previous peaks and troughs, but we still expect that it's really counter trend. The next support level that we would be watching, let me show you on a Fibonacci retracement, which we think is really a great way to try to understand if something has fully reversed or not. So here's your 105, also an enhancement of that by a Fibonacci retracement level longer term. The secondary support you can see is around 102, but then if you look forward per this cloud model, it does rise over time. So my thought is that we'll see it dip below 105, but not for very long, and kind of come into this support level, perhaps in here, and resume higher, noting that we already have, with the downdraft that we've seen, an oversold condition on the weekly chart here. So the weekly stochastics are already oversold. So in a way, you could see the corrective phase is already having worked off the overbought excesses that were built in with that very strong uptrend.
Okay, yields, Katie?
Yields, well, there too, we have a corrective phase, as you know, unfolding, and the correction follows a breakout. The breakout put next major resistance for the U.S. 10-year yield around 5.25. We think that that's actually a realistic level, looking out long term. But near term, there is additional downside. And we say that for a couple of reasons. One, the stochastic oscillator. So we're seeing that reaction to the overbought condition, still seemingly in its earlier phases here. We're likening it to the summertime sort of corrective phase here. The DeMark signals are somewhat similar too. So we're looking for 10-year yields to come in to about 3.5, if not even deeper, to secondary support around 3.25 before this longer term uptrend resumes. The yields, you can see even just over history, they do stair step higher. So as much as we're focused on these run-ups that can be so extreme, they are sort of dotted by these plateaus or corrective phases. So I think that's what we're in the midst of here on 10-year yields, and somewhat in falling with what we're seeing on the dollar.
Okay, and most would interpret that as being a tailwind for risk, right? But isn't there a chance, I don't know if you have a chart on it, that part of the move down in yields might be some type of growth scare? That rates, most people don't think that rates could come down and the market could fall at the same time. Is there anything in your work?
listen, like I'm not one to ever rely on any correlations. That's why I try to, when I evaluate things, I'm not a macro strategist by any means. So I'm probably well served just looking at things independently. And in doing so, it's like you're removing any of the biases that come from those historical correlations, which we all know do break up for, months at a time, right? Thinking about the dollar and the relationship.
Thanks for reminding me. No, really, Katie, I need to be reminded of my paradigm that I go to, because, you're so right that every instrument is its own individual entity. And when you start to put the jigsaw puzzle together, sometimes you put the wrong piece in, and then you continue to build it.
It's been a really difficult year for that, right? So many people were burned by the move in treasuries, and reasonably so, because we're breaking away from historical norms. But we know that that's the case, and that's why I think the charts are so valuable, because they can help us navigate sort of these short to intermediate term periods during which the correlations get disjointed.
Okay, I wanted to ask you about the gold miners, because Newmont is putting in a key reversal month. I know we have maybe a week of trading left, but pretty serious reversal, right back to resistance. Are you getting anything in the miners that tell you that we're getting some type of bottom might be near?
Yeah, so we actually added Newmont last week to our long ideas. So we're on board with that. And we feel that the gold miners. Yeah, exactly. So we do feel like also they have more shelf life as a counter trend position. It is counter trend still, because we've seen Mont and others trend lower for more than several months. But they do have indications of at least an intermediate term basing phase with the recent breakout. And that breakout reflects improved intermediate term momentums. And you can see that here in this weekly MACD. So at a very minimum, we're willing to try to take advantage of this as something that should give us a nice retracement of this downdraft. And we're seeing strength really across the metals complex. So it's not just gold, but we think that this is something that we're a little bit more comfortable trying to leverage, as opposed to perhaps
uranium.
Yes, uranium too. But versus, picking up shares of the mega caps or something like this, where we feel like there's still some real toppy long-term formations, we're looking for things that don't look at all like Apple or Tesla. And Newmont would certainly qualify.
Yeah, I was looking at Apple yesterday. It looks vulnerable to me for a break to another low. Is that? And the market held up pretty well with Apple under attack yesterday.
I would agree. And that shows some breadth behind the relief rally, and yet another reason to expect it to persist a little bit longer here. We're thinking that mid-December, we might see it falter, but then we have positive seasonal influences, perhaps, that can keep a floor under the market until we get our proposed volatility event. We actually have this morning, I should say, our first counter trend signal in the VIX per the DeMark indicators. And it's something that we're keeping an eye on. It's not something that we're acting upon yet, but it's sort of a potential issue here in the relatively near term, where we look at these signals as basically indicating that the VIX is oversold, right? So here's our signal today. And when you see them, you often see some kind of rebound in volatility. So if that signal is confirmed, here's the last time we saw.
Well, maybe instead of resolving this to the upside, the last 4 or 5 days of sideways action, the VIX is saying there could be a shakeout prior to the next advance.
Yeah, that's interesting. It's definitely one takeaway. So we're really watching, again, these daily MACDs, like if this is on the VIX here.
Yeah.
This crosses up, well, that's something that we would see as a risk metric for the S&P.
Someone told me that VIX is the most undervalued asset on the board.
Oh, goodness.
Yeah. Anyway, that I thought I'd throw it
a
out.
difficult thing to trade, though, isn't it?
Yeah. I mean, look how disappointed people have been through this whole bear phase, looking for a 50 VIX, and 32 was the best we could ever do.
Look at a 50 VIX, but I don't think folks are generally well served by just picking up a VIX product and forgetting about it. I think if you're trading the VIX products as hedges or for directional bias, I think it means you really need to be close to the market. So watching it every day and really attuned to the short-term indicators to have any success there.
They actually have VIX futures now, Katie.
Yeah.
The old SIBO floor, and they have locals down there trading VIX futures now.
Yeah, there's so many nuances to it, right?
It doesn't have decay like a lot of the products, have this decay built in, that even if it's going sideways, you're losing money.
That's right.
Like an
option.
option.
You can see it every day, just in terms of just, the comparison to the VIX itself. This is a monthly chart of Apple, and I agree with you. I think,
wow,
I take issue with it. I mean, just on the surface, it looks toppy. So, that's something that, will be problematic for the major indices if that's the case. There's this long-term support around 127. You can see the monthly gauges all pointing lower. So it doesn't have immediate implications, but I would suspect that if Apple gets perhaps back up into its 200-day moving average, it might get sold again.
Yeah, because it's what, 8% of the market, Katie?
Yeah, something close to that, 6 or 7, depending what you're looking at. But it still has a real influence on market sentiment.
Okay, so let's go to my favorite sector in the universe, the cannabis sector.
Oh,
I know last time when we were talking, things were starting to develop, and I know you're strictly a technician, but there are people saying that President Biden may get the SAFE Act through by the end of the year. What's your stuff saying about?
Well, so we just published, we have a monthly cannabis report that we publish, and we just published
why? Because it takes people a month to read it because they're using cannabis.
We figure it's going to take some time to turn.
All right.
So we want to be there too. I do also have a position, and the position is in part because I feel like it's a bit of a call option, right? If you have some kind of regulatory event there, that you have to be there ahead of it, or else you'll probably miss the bulk of it in terms of the initial reaction. But we like to think of it, in terms of a potential early stage base. This is MJ, the ETF. Bullish short-term, neutral intermediate term, bearish still long-term. The indicators have certainly shown improvement. You can see that over the past, really even months. But with that, we really don't have much price appreciation on the back of that. We definitely have sort of in the underlying, though, some signs of life is the way I've put it. And you can even see it in relative strength terms. So this is MJ divided by the S&P 500, a little bit of a basing type of setup there as well. Within the sector, we like to pick it apart and look for sources of leadership for those that are interested in actually investing in the companies, not just the sector. And there's definitely some cyclicality to it, which is kind of fascinating. Like Tilray here would look very attractive on this relative rotation graph. So we try to break it down into names that have some better relative strength. But when you look at them on the surface, this is just a sort of a selection of different names. They all sort of look the same, right? It really feels like it's such a top-down oriented sector. And that's why, and this goes for all sectors, in order, if something's really homogenous from a technical perspective, you really are well served to look at these relative rotation graphs or some kind of relative interpretation to try to find the sources of leadership for when the sector comes out of this bear market cycle. So I think, if it's not going to be helped by the fact that the broader market still, I think, has some downside. That's
my conflict.
Of
owning anything, right?
Right. They wouldn't be immune to a downdraft to, say, 3,200 by the S&P because they are high beta and will be sensitive to that. But in and of themselves, there's definitely some signs of life there. So, if you can,
great report.
Yeah, if you can buy it and just kind of forget about it and not look, maybe in a year from now, we'll be well served by that.
How do people get that report?
You can sign up for this report on our website. And so we have this report and a cryptocurrency compass report as well. That's a weekly. These reports they're very low priced, and we figure they're just there for folks that are concentrated in these names or just interested and want to know when they're actually turning the corner longer term. So right now we're just putting them out there as placeholders until we get that bullish shift longer term. But there are always there's always themes and action items. Obviously the cryptocurrency market has changed, for the worse. And yet we do think there's long-term opportunity there. So it makes sense to continue to, track the charts and just wait for any kind of positive divergences and to be there when those manifest themselves.
Okay. Richard Angeles, Katie's website is FairLead.
Right, it's fairleadstrategies.com.
Yeah, that's
easy. Yeah, let me see if I can write. It's there. And we also have sort of a new service. I can't remember, Dale, if we talked about it last time. Outside of our ETF, we have something called the FairLead Strategies Idea Generator, and that's on Substack. But here you can just click through the research and choose whatever research you're interested in, either sign up or pick up a trial of the equity product. But we have this new Substack research report or idea generator that has usually about 3 new ideas a week. So we will publish, anything that we feel like is kind of interesting in this. We actually had Barrick Gold as one that we presented as an idea not too long ago. So we put out some just technical ideas here. We intended this to be a long only product, but now it looks like we're going to have to start adding some short ideas, not to fight the tape, but.
Okay. All right. Well, I wanted to wrap it with talking about some of the oil shares, which way outperformed the WTI for so long. And finally they're beginning to cave a little bit, but crude is trying to rebound. Is there still a lot of vulnerability in the shares, since people felt they were going to print money and they diverged from the real commodity for over a year? Crude topped on the invasion. That was 8 months ago. And the shares have continued to climb higher. What's your thought here? The shares are right?
Yeah, well, listen, I think I don't know that we want to think of them as like one influencing the other necessarily, because we have seen that break.
See, there I go again.
But here's my thought. And listen, we are sort of still all in on the energy sector. It's the only sector position that we have in our ETF right now, the Fairlead Tactical Sector ETF. But if we look at this is the S&P 500 sectors year to date, up 63%. Isn't that amazing? It's just remarkable. It really is. This spread on the sector front. And this is the second year of this, right? So we suspect that energy is certainly going to move down the ranks. I don't think it will be next year in this sort of top billing here, maybe not even top 3. So we are looking for a sort of a pullback in relative strength, but it's not imminent yet. Right now we're just looking for a pullback in absolute terms. So this is XLE, the energy spider. This is a DeMark signal supporting a couple weeks of sort of sideways to lower price action. But even the long-term gauges still do point higher. We have a 200-day moving average pointing higher, you can see, and really a very favorable setup still in the monthly gauges. So there's so few things that have a monthly stochastic and MACD that are pointing higher. So to reward one of the only sort of areas of the market that is in a long-term uptrend, that's what we're doing with energy.
Yeah,
but
stay with what took you to the dance.
That's right. Until it proves us otherwise, right? We'll see more deterioration in these longer term gauges before a major shift. So we suspect that it will maintain the relative strength, but we're also seeing relative strength from materials, and that's helped, of course, by the miners. Industrials have done very well, so cyclicals have done pretty well throughout. Where we have sort of an underweight recommendation on the sector front would be those same sectors that have exhibited downside leadership for the most part this year, like technology, communication services, and discretionary. FANG, exactly.
Yeah. So Katie, I have to ask you about Bitcoin. Yes. And then I'm gonna then we can part ways. But I have to see, what a debacle, and what a shame. A million people of, basically that, a lot of people, I don't know, they enjoy seeing other people in misery. I really don't. I don't think it's good for the industry for that many people getting burned in a fraud. So,
it's sort of a crisis of confidence here. And I think it will take a long time for this whole arena to recover. But it was already trending lower ahead of this most recent breakdown. So we've been respectful of the longer term downside momentum. This is we've been watching the Fibonacci's on here. Wait a second, let me get to the right one here. For Bitcoin, the last one that was being tested and holding was this 18,300 level. This is a monthly bar, but now we have a confirmed breakdown below that level. That puts next support, unfortunately, down around 13,850, which is this previous resistance level. And you can see it's starting to align with the monthly cloud. The monthly cloud, believe it or not, could tell us that this is still like a secular bull trend. But we think it's going to take a lot of time for us to get the buy signal that we had back here. So we would give it probably a few months, soonest, to see some kind of turnaround. That's something that we can really leverage very near term. I actually don't think there's a ton of downside from here, because there are some DeMark indications that suggested the down move a couple of weeks ago was enough for now, but I think the risk is still very heightened, intermediate and long term.
Okay, well, Katie, the last 30 minutes definitely again shows why every important financial media outlet wants to have you on the air as a guest, because you're the best.
Thank you, Dale. That's really nice of you.
Really, I mean, I learn from you every time you're here, and you mentored me about trying to, figure everything out and just trade the charts. People need to hear that, even veterans, because we all, it's all in our heads, right, Katie?
Well, we're all guilty of it, and letting those biases sort of get worked in, and that's why a systematic approach can be really valuable.
Happy Thanksgiving to you and your family, Katie.
Thank you so much, and same to you and yours. Take care.
Really, great catching up with you. I'll be in touch.
Okay, sounds good. Bye.
All right. Okay, everyone, Katie Stockton, and you could join the team in 15 minutes on the Morning Edge. Wish everyone a good day, good hunting. People are saying thank you, Katie, if you're still with us, and I'll see everyone tomorrow for the last day of the week. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.